Right, good day, grade 12. This lesson we're going to focus on the incentives that the government offers to businesses to encourage industrial development. Now, again, if you look on your exam guideline, it says briefly discuss the incentives used by the SA government to improve industrial development. We're going to look at the SBSP, okay, Small Business Support Program. We're going to look at the CEDA Technology Program, the Skill Support Program, critical infrastructure facilities, custom-free incentives, which are discussed by the IDZs, foreign investment incentives, strategic investment incentives, and then services to business processes. All right, so this is briefly discussed, so definitely not an essay question. Basically, this will be 8-mark discuss questions. They can use some of this for a dart response question or short questions. All right, so now we said that the government obviously wants to encourage industrial development. They want to encourage businesses to establish in certain areas, and obviously they have to give them some advantage. They have to motivate businesses to want to establish in South Africa or in an IDZ or in an SEZ or whatever the case may be. All right, so the government has offered different financial incentives. Some of these incentives are exclusively for domestic businesses. Some of them are exclusively for foreign entrepreneurs. Okay, but it's an incentive that the government offers to any entrepreneur wishing to establish a new business in South Africa. All right, so the aim of these incentives are to encourage the development of businesses so that the government's SDI program can be successful. Okay, so obviously we want ideally for these businesses to be established in underdeveloped areas so that we can uplift the underdeveloped areas as well, and obviously create jobs in areas where jobs are scarce. All right. The purpose of the financial incentives, obviously this is important. Okay, the main purpose basically is to establish new businesses, to encourage the establishment of new businesses. It's to involve domestic and foreign businesses in the government's SDI. Okay, remember we said with the SDI that the industrial development must happen ideally as a result of private sector investment. All right, so obviously the private sector investment can come from local sources, local entrepreneurs opening local businesses, but also it can come from foreign businesses. Right, the IDZ specifically was aimed at increasing foreign investments into South Africa. All right, ultimately we want to promote industrial development, and we want to become more industrialized. When new industries are established, obviously it goes hand in hand with job creation. So we know that in these underdeveloped areas, the unemployment rates are relatively high. So one of the aims of this financial incentive also is to encourage industrial development. And when people open new businesses, that obviously will lead to job creation as well. And then very importantly, we want to establish sustainable businesses. The idea is that it should be an ongoing business, a stable business that is going to continue for years to come, and they should be able to compete both locally and internationally. That's why a lot of these incentives you'll see is a financial incentive, obviously to decrease production costs, to make them more competitive. Okay, lower prices leads to more competitiveness. All right. So we want the businesses that we establish through industrial development to be sustainable, not fly by night. They have to stay there and create jobs for people. And they have to be able to compete locally and internationally without being pushed out of the market. Obviously, if they are not competitive, their prices are too high, the demand for their products are too low, they are not going to be able to compete, they're going to be closed down, and that is not sustainable. All right. So the kinds of business that we want to establish are businesses that will be successful in the long run. Okay, so what we're going to do is we're going to look at each of these incentives, okay, individually. All right, and just remember this is not part of an essay question. It is purely an 8-mark discuss question or dart response, anything like that. Okay, so the first incentive that we are looking at is the Small and Medium Enterprise Development Program, the SMEDP. This basically is a cash incentive that is given to small and medium-sized businesses, okay, and to qualify, the total value of your assets has to be less than 100 million rand. Okay, that is what it means, small and medium-sized business. The assets must be worth less than 100 million rand. Okay, but it is a cash incentive that is given to small and medium-sized businesses that specialize in the production of goods and services, including manufacturing, food processing, tourism, and recycling. So specific industries that these incentives are going to be given to. Right. So this cash incentive is available to new and expanding businesses. Okay, so if you are an existing small or medium-sized business that wishes to expand, you can apply for this incentive. Or if you're an entrepreneur wanting to start a new business, you can apply for this incentive. The catch is, once you have established your business, you must be competitive in your own right. Okay? The government is not going to protect you as an infant industry with protective measures, with subsidies, with import taxes, with quotas or anything like that. Once you have received the incentive, you have to be competitive in your own right. All right? You cannot depend or need more government intervention, more protection from the government. Once that incentive has been paid, the government's duty is done. You have to then run that business in a sustainable way. Okay, the aims of the SMEDP, of this incentive, is to create wealth and private sector investment. Okay, so obviously to make it easier for people to start businesses, okay, by giving them this cash incentive. Obviously, the cash incentive can be used to start the business, to supplement your resources that you already have. If you need a little bit of extra money or whatever, this cash incentive can make up the shortfall so that you use your money to start a new business. Okay, it is also given to foreign businesses. So it doesn't have to be a local business. If there's a foreign business wishing to be established in South Africa, they can also qualify for this incentive. And then obviously this will lead to foreign investments, which is an injection, which is a good thing. They want to increase participation of small and medium businesses in economic activity and employment. We know that competition in the market sometimes is tough, and sometimes your small and medium-sized businesses find it very difficult to compete against bigger businesses that have been established for a long, long time. Okay, so we want to encourage competition. Remember, that's part of the Competitions Act as well. We want to make sure, we want to increase the likelihood of small and medium-sized businesses to actually survive in the market so that we can increase competition in the market. All right. We reduce investment costs for small and medium investors. As I said, this cash grant that you are receiving is you can use to supplement your own resources. So if, for example, you have 100,000 Rand to start a business, but you need 120,000 Rand, for example, depending on the value of the cash incentive, this cash incentive that the government gives you reduces the amount of money that you physically have to invest when you start a business. The government gives a little bit, you give the rest. So you don't have to come up with that much starting capital because the cash incentive that you receive will reduce the amount of your own investment. Okay, and then lastly, it was to promote the sustainability of local and foreign investment. As I said, we said the business must be competitive in its own right. So once this incentive is paid, we are just ensuring, maybe helping a little bit, that small and medium businesses will be able to survive in the market with the help of this cash incentive. Right, the second incentive is the SEDA Technology Program, or the STP. Okay, STP is a division of SEDA. SEDA stands for Small Enterprise Development Agency. Obviously, the kind of incentive that this is they provide support to small businesses, okay, in terms of technology. All right. Remember, not all businesses can afford to be technologically advanced. They can't always pay for the research to become technologically more advanced. So the SEDA Technology Program is there to focus more on the technology side of the businesses and provide technological support to smaller businesses. Right, then we get the SSP, or the Skills Support Program. This is a financial incentive that takes the form of a cash grant of up to 50%, maximum 50% of the cost of training new staff resulting from an expansion or a new project. All right, so if you are an existing business that wishes to expand, okay, build another factory, obviously you are going to need to hire more staff to work in your extra factory, or if you are launching a new project that you need extra staff for. All right, So if an existing business is expanding or launching a new project or a new business that is being established, obviously if they have to hire new staff, this new staff might have to be trained. And training obviously is expensive, which increases the production costs of these businesses, which makes them less competitive. So from the government side, they say, right, it's fine. We will cover up to 50% of the cost of that training. So you pay for the training of your new staff and you submit your proof and your whatever. And then obviously the government can refund you the cost of the training that you have paid already, but up to a maximum of 50%. Obviously, it depends on how much you spent on training, how many new staff you hired, how many jobs you created, but the government will evaluate your request, and obviously up to 50% you might get back. So they are basically paying up to 50% of the cost of training, so it reduces the money that you have to pay for training, so it also helps to reduce your production cost. Okay, the aim here is to encourage investment in skills training. All right, obviously businesses in general do not like to appoint unskilled workers because they have to train them and it is expensive. But we also know that we have an oversupply of unskilled workers. So it is really essential that we create jobs for these unskilled workers. All right, so the skill support program is there to encourage businesses when they hire new staff to consider hiring unskilled, untrained workers and then to pay for their training because the government will refund you a certain percentage of that training. All right, so obviously it benefits the labor force. People that didn't have skills before are now going to be sent for training. So they gain more skills, they become more skilled, and then you as the business don't have to cover the entire cost of this training. Right, the next incentive is called the Critical Infrastructure Facility or the Critical Infrastructure Fund. This is basically a cost-sharing grant for projects that is designed to improve critical infrastructure, like the roads, electricity, water purification, communications, whatever, in South Africa. All right, now this basically goes to municipalities. All right. So the Critical Infrastructure Fund is there to support municipalities. If municipalities know they can identify certain areas within their municipal area that lacks certain infrastructure, they need to expand the roads, they need to maintain the roads, they need to build new roads, they need to expand the electricity network, whatever, then obviously that is costing a lot of money, right? So this grant is going to be from a minimum of 10% to a maximum of 10% towards the development costs of qualifying infrastructure. All right. So as I said, it's made available to businesses like municipalities and companies or whatever that are building this infrastructure, the people that are supplying the infrastructure. All right. But it has to be deemed as critical infrastructure. They can't just build a road for summer and then ask like 10 to 30% from the Critical Infrastructure Fund, right? Critical infrastructure means that investment in the area will not happen unless the infrastructure is provided. All right. So for example, if they've now identified an SDI, they've identified an underdeveloped area, they want industrial development in this area, and businesses will say to them, it's fine, I will build my factory in this area, but I need the road to come to my factory. I need to have electricity supply. If I don't have transport electricity, I will not build my factory there. Then the road and electricity is deemed as critical because lack of infrastructure will mean that the investment in the factory is not going to happen. All right. And remember PPPs, the government is required to provide the infrastructure. So if they want me to build my factory in a particular area, and I insist that I will only invest in that area if they provide me with proper transport, communications, and electricity, for example, that transport, communication, electricity that my investment is dependent on, it is deemed as critical because my investment is not going to happen unless the infrastructure is there. All right. So if the municipality then provides the infrastructure, obviously they have to pay for the infrastructure has to be provided, but then at the end, they can claim back basically 10 to 30% of the money that they've paid to upgrade the infrastructure, they can get back from the Critical Infrastructure Fund. The next incentive is the duty-free incentive, which basically we have discussed when we did the IDZs, all right? Remember, any business that is established within an IDZ is allowed to import any equipment, machinery, raw materials, whatever from any other country without having to pay import duties, all right? But remember, the catch is they have to export their produce, all right? So the duty-free incentive is the fact that they don't have to pay import duties. That is what the duty-free incentive is. Anything they import is imported duty-free. They don't pay import duties. All right. And we said the aim of this is to obviously increase their competitiveness. By allowing them not to pay customs duties, we are decreasing their production cost, which means their prices tend to be lower, which makes them more competitive, meaning that our exports can increase. Okay, remember, whatever they produce, they have to export. The whole idea behind an IDZ is to promote exports. All right, and then second aim is to promote foreign and local direct investment. Remember, we said that when a business is established in an IDZ, the money for the establishment of the business doesn't come from the government. The private sector has to come up with the money. So the entrepreneur that wants to start a business, he has to invest in that business, whether he's a local businessman, whether it's a foreign businessman. The idea is to attract investments into the IDZ. Okay. Then the next incentive is the Foreign Investment Grant, or the FIG. Obviously, you can deduct from the name that this is an incentive that is provided only to foreigners. All right. So this is in the form of a cash incentive, once again, that is paid to foreign investors when they establish a manufacturing business in South Africa, and they have to move certain things. They have to relocate their machinery, etc., etc. All right. So any foreign investor who's willing to invest in a new business in South Africa, it has to be a new business. Okay. So basically, your foreign entrepreneur is compensated for the qualifying costs of moving new machinery and equipment from abroad. But it excludes vehicles. You can't import a delivery vehicle and say, okay, I want a foreign investment grant now. If you are establishing a business, and obviously the machinery and equipment is not available in South Africa because it tends not to be, and you have to bring over new machinery and equipment to put into your factory, obviously the transport of that machinery and equipment is hectically expensive. All right. So this grant is then paid to the entrepreneur to help him to cover the costs of moving machinery and equipment from his country of origin into South Africa where he wants to start the business. All right. So the grant is available to any company that operates in the manufacturing sector. Okay, it has to be manufacturing. It can't be mining or agriculture or tourism. This grant is only available for manufacturing because obviously we are trying to create high levels of industrialization. All right. The only condition is that the company has to be registered as a legal business in South Africa. This person can't just be kind of a silent investor that's not involved in the project at all. It has to be a business that is registered as a legal business in South Africa. All right. And the amount of this grant that they can receive, it covers up to 15% of the costs of relocation of this machinery and equipment. But the maximum of this grant is 3 million rand. All right. You can just imagine how expensive this relocation costs is. If they say that 15%, but up to a maximum of 3 million rand. Okay. So the total cost, if the maximum is 3 million rand, the total cost is so much more. All right. So because it is so very, very expensive, foreigners will be discouraged to invest in the country because it's too expensive to move their machinery and equipment. So our government says, no, come open the business here in South Africa. We will cover 15% of your relocation costs. Then it's less expensive for them to bring their machinery over and they are more likely to start the business. Okay, the second last investment or incentive is the Strategic Investment Program, or the SIP. Okay, the main aim here was to attract investment from both local and foreign entrepreneurs, obviously to contribute to the growth and development of our manufacturing, computer research and development fields. All right, so any business that is established in this field, okay, whether it's a manufacturing business, a computer IT related business, a research facility, Okay, any business involved in these fields. We want to make them more competitive. So basically what the SIP program is, it consists of a tax deduction. All right, so they are allowed to pay less taxes than what they normally would have to pay. All right, so they basically get tax rebates based on the amount of the investment and the amount of jobs that they create. Obviously, the bigger their investment, the bigger the tax deduction. The more employment created, the bigger the tax deduction, because they are doing the government a favor by starting businesses and creating employment. So the government gives them the advantage of reducing the taxes that they have to pay. All right. Obviously, these are identified activities, right? These are the activities that they wish to stimulate with this program. And then the last one, business process services or business process outsourcing, offshoring. This incentive program basically has created at least 6,000 jobs and attracted 303 million rand in direct investments. Remember, I said your business process outsourcing is that if you establish a manufacturing business and you manufacture clothing. Outsourcing means that you are not going to do your own advertising, right? You can concentrate purely on the manufacturing of your clothing. You outsource to a different business to do your advertising. You outsource a different business to do your financial statements, to keep accounting records or whatever. You outsource your debt collection. You outsource whatever, all right? So that you as an industrial concern, as a manufacturing business, can concentrate purely on manufacturing and you don't have to hire extra staff that is competent to maintain the financial records or to do the marketing or the whatever. You outsource that, you pay another business to do that on your behalf. All right, it also reduces your production cost because you don't have to employ extra people to do all of these things. And obviously that is not necessarily where your skills lie. If you want to concentrate on manufacturing, it gives you the opportunity to concentrate on what you are good at and not to have to hire extra people and whatever extra costs to do all of these other things that has to be done. Then you have to maintain accounting records. You have to advertise, obviously, but you can outsource that to a different business where there's qualified people that can do it on your behalf.